Hello beautiful people and welcome to Nike Intrinsic Valuation. In this analysis we will see why the stock price fell down by about 37% during this year alone, even though the revenue is increasing year over year, and why it's still overvalued even after this massive drop in the stock price. But before any of that, I want to remind you that this video is not a financial advice and it's for entertainment purposes only. Also, I want to invite you to take advantage of an investment opportunity, which is subscribing to this channel and liking this video, to motivate me to make more analysis videos that may help you in your investment journey. Nike Corporation is the largest seller of athletic footwear and apparel in the world. And in 2022 fiscal year, the corporation had three operating segments. The largest is footwear, which is about 66% of 2022 revenue. Next is apparel, which is about 30%, and then equipment, which is about 4%. And yes, you heard me right, I mentioned 2022 operating segments because it has a fiscal year and its 2022 year ended on May 31st, 2022, so we will forecast 2023 numbers. Nike's performance is fabulous and is shown by their revenue that it's increasing year over year, except a little dip in 2020. And we have the 2023 Q1 report, and as we can see here, the revenue in this quarter is stronger than any Q1 revenue since 2016. Also, we can justify the small decrease in 2020 revenue by the fact that Nike's 2020 year actually ended in May of 2020, so probably Q4 revenue got affected by the initial lockdown. Another indication that Nike is performing well is shown here in the stable relationship between the revenue, cost of sale, and operating expenses in the past few years. As you can see here in the graph, we don't see any crazy jumps in these two expenses. Looking at the free cash flow, it actually got a big hit in 2020 and 2022, as you can see here. As a reminder, the free cash flow is the operating cash flow minus capital expenditures, and in my opinion, is a better way to measure earnings from operations, so I'm using free cash flow to value the stock. If we look at this graph that shows the revenue, cost of sale, operating costs, and free cash flow, we can tell that the 2020 decrease in free cash flow is justified by the decrease in revenue for that year. But the decrease in 2022 free cash flow was a puzzle in the beginning, because as you can see here, the revenue is growing and the expenses are under control, so why the free cash flow decreased? It doesn't make any sense. After examining the cash flow statement, I realized that Nike mismanaged one item by spending more than the operations need. In other words, Nike mismanaged their inventory, and if we plot inventory and free cash flow, we can see the obvious relationship between the two. It is very clear that in both 2020 and 2022, they have higher levels of inventory than usual, which negatively impacted free cash flow because the inventory is one of the items that adjust the net income to get to the operating free cash flow. And in my opinion, the inventory mistake sent the stock price down by about 37% since last year. I think the increase in interest rates and inflation has a small role because the revenue is increasing and the expenses are growing naturally with the revenue as we saw earlier, so the gross margins didn't get affected. The bad news is that 2023 Q1 report shows even higher inventory accounts than 2022, and actually it is a record high since 2016. So that encourages me not to be so optimistic about forecasting 2023 free cash flow. Moving on, Nike is doing very well in reducing the debt they had to increase since COVID. As we can notice, the debt increased from 15% to 30% of total assets in 2020, but went down to 25% in 2021 and 23% of total assets in 2022. Also, they don't have a problem servicing their debt, and we measure that by the times interest earned ratio, which is about 38 times in 2022. This ratio tells us how many times the interest expense Nike makes in earnings, which is why it helps us to measure the ability to service the debt. When we look at the outstanding shares, Nike unfortunately issued new stocks in 2021 after a steady decrease since 2016. But at the same time, we can notice that they started repurchasing their shares back in 2022. And Q1 report of 2023 also shows lower outstanding shares, which is something that makes all remaining shareholders happier because they have higher earning per share and higher free cash flow per share. Thankfully, Nike is strong enough to continue distributing dividends, and as we can see, it's steadily increasing year over year. And in Q1 of 2023, they distributed 31 cents. So if they distribute the same amount every quarter in 2023, then they will distribute even more than 2022 dividends. Now let's come to the forecast part. We use 6 pieces of information to forecast 2023 numbers. The first one is the working capital to the revenue ratio, which is telling us how many revenue dollars are generated from one working capital dollar. And if you forgot what is the working capital, it's the current assets minus current liabilities, and it represents how much liquidity or cash the corporation has to conduct their operations next fiscal year. And as you can see here, it ranges between 4.32 to 2.81. And in my opinion, we need to be conservative and choose the lower end of that range, which is 2.81. The second piece is the outstanding shares forecast. We know that Nike started to repurchase their shares back because they mentioned this information in the annual report, and because this graph is showing a decrease in the outstanding shares. So in my opinion, 1,560,000,000 shares is a good conservative forecast. The third piece of information is the free cash flow to revenue ratio forecast. And as we can see here, it ranges between 12.1 to 3.6% in the past 6 years, so I use the average of the prior 2 years, which is about 10%. The fourth piece of information is the required return on investment percentage, and that is something up to you to decide. As a starting point in every analysis, I like to have 5% return on investment. The fifth piece is the discount rate, and I'm using the Treasury bill interest rate for 52 weeks or 1 year, because this analysis is only forecasting the stock price for 1 year in the future. The final piece of information is the working capital, that's the current assets minus the current liabilities, and we can find this information in the prior year balance sheet. This will give us about 49 billion in revenue and about 4.9 billion in total free cash flow, which will mean $3.15 free cash flow per share before the discount or change it to the present value, that is $3.01. So if your return on investment is 5%, then the most you should pay for Nike stock today is $60.15. But the stock price is trading for a little over $100. And this is the reason why I think it's overvalued. Unless you change the return on investment percentage to 3%, then the most you should pay about $100.24, which is about the current market value. So if you are okay with 3% return on investment, then the stock is not overvalued for you. But for me, I want to have 5% return on investment, so I think it's way overvalued. And to address why the market is overvaluing Nike stock, I think because it is a mature, stable dividend company, and there are many investors who like to invest in such a dividend company. Thank you so much for watching this video to the end. Please consider motivating me by subscribing to the channel and liking this video.